Hey guys, what's up? This is Andrew for TRENDLINES.com. So as you can see guys, I'm back right now in Hong Kong, but I'm not in my place. I'm in a quarantine hotel. I'm gonna stay here for 2 weeks, unfortunately. It could have been 1 week if I had some antibody test, but this stuff is just so complicated. So anyways, I'm stuck here guys for 2 weeks, and of course I'm gonna take some time to be on my Discord channel first. So I spent a lot of time there yesterday and trying to give some insight about AMC price action that is not looking good. I'm gonna here make a full update about AMC. I'm also gonna make an update about GME. And yeah, I have to say that I don't feel so good, guys, to be honest, but I don't have the COVID and I feel good enough to make an update on AMC. So let's get into it. Alright guys, so as usual, I'm gonna start by reminding you what I was saying in my last video. So in my last video, I was basically here seeing, it was like this guys. So we bottomed at 38.7, and we had this huge strong rebound of 25%, which was looking very good with some strong associated volume. So this could be our reversal that we were waiting for the fifth wave. In these situations, usually those sharp moves up, they don't retrace a lot. That's why I was telling you guys that if we break 45, and I know that 45 is quite high, but when you have this kind of strong rebound, after such, bearish moves, here we lost, 35%, then the move up should be very strong. Otherwise, it's going to fail. It's usually happening like this. So I was looking here for some support levels, and I found this trend line. And I told you guys I had also the moving averages on the 4 hour time frame. And I told you guys that if we close below 45 here, we would probably go to 24. Why I said 24, guys? Because I knew that here, if we are not able to hold the price at this level, which is, no surprise, guys, a fib level. When I measured this first wave, it's the 38.2% was 45.5, so it was roughly the level I gave you, and maximum we should go to 44. So I have all this area where I wanted to see some support and some reactions. We didn't see it, and it's with no surprise that we got back to 38 and we broke 38 yesterday. Once again, guys, for those who want more insight about the AMC price action or whatever, GME, Bitcoin, go on my Discord channel, guys. I put there a lot of information. I mean, I do my best to post some daily information, especially at the open. I'm in Hong Kong right now, so you guys know that we have 12 hours difference with the United States, where AMC is trending. So I told you guys yesterday that I don't think 38 would hold for the same reason that I just told you guys, that if we break 45, to me it means that the correction is not done, and I don't see 38 holding, and it didn't hold. So right now, what are my different scenarios? So something I want to talk about, guys, on my Discord, there was some of you that were telling me, oh look, on the 5 minutes time frame, on 15 minutes time frame, I have a lot of divergences. And they were trying to use those divergences to actually predict the reversal. So let's see. Actually, yeah, you can see that here you had a lot of divergences. All right, the MACD making new lows with the price action going lower all the time. But careful, guys. Basically you have the regular divergence. This is a regular divergence, and you have the hidden divergences. So the regular divergences are going to show you a reversal. So if you have a reversal, you have a breakout. So I prefer to wait for the breakout and associate it with my divergence. Otherwise, a simple bearish regular divergence is not enough for me to actually decide that the reversal coming is my preferred scenario. And here you can see that those divergences were not enough. So what you're looking for, guys, here, I sent this as well on my Discord, guys. It's that this trend line needs to be broken somehow. So, something like this. This is what you guys want to see. So here, once again, we have a nice bullish regular divergence, all right? Let me show you the divergences once again. So let me show you guys once again what I'm talking about here. So the regular bullish divergence is this one, guys. So basically the market is making new lows, but the momentum is shifting up, all right? So you can use MACD, RSI, or stochastic. And this means that the bears are out of steam, out of energy, and that the bulls are probably going to take back control soon. But once again, we had those all the way down, guys. So I always prefer to associate those regular bullish divergences or regular bearish divergences with the breakout. So wait for the breakout here. So right now it's around the 35 area, and this would mean that we would go to the 42 area. You can do the same thing on a higher time frame, guys. You zoom out And here, for now, you see we don't have the divergence, but if we go here, we would probably have a divergence. And you need to wait for the breakout of this trend line, all right? This is the yellow trend line here. By the way, I hope my cursor is big enough for you guys. I couldn't change it in white, but I put it bigger. So I hope everyone can see what I'm doing here. And this trend line, guys, okay, this is what we need to break to confirm that the correction is definitely complete. Because if you have a breakout here, we could still go lower. So I'm coming to my different scenarios. Now that we broke 38, what can happen? We have two different scenarios. Either we rebound at 32, 33. So let me show you how I found those. I just checked this. So once again, I sent this exact thing in my Discord, guys. So please go there. You're gonna have a lot of information. There are a lot of people that are very qualified in technical analysis. So I'm not the only one sharing my analysis, and we just discussed this. And this morning we were discussing what are the different scenarios for the C wave. And you use this stuff, guys, in the Elliott Wave book that you can find on Google. And basically it's saying that you can measure. So you use fib extension, you measure from 0 to 3, and you apply it to the bottom of the force, right? And the typical ratios are 61.8%, 1 or 1.618. So the 1.618 goes to 8. So this is off the table, guys. It's too long. It would mean that we have a very extended fifth. It's nearly impossible here. So the two realistic scenarios are we go to 0.618, 34. So 34 is a very strong level, but I'm going to come to this very soon. You're going to see that it's unfortunately not my preferred scenario. And the next one is 24. 78.6 is not one of those, guys. So basically we have the choice between 34 and 24. So we could have already completed this fifth wave that can go here, and then we bounce back and we do 1, 2, 3, 4, 5. And of course, we go to the 100, 135 area. All right. So my fourth wave would be here. Let me get rid of this for a sec. But guys, look, when I connect the bottom of the first wave with the bottom of the third wave, it gives me a support trend line, a downward sloping trend line that is acting as support. And this has been broken on the 4 hours, not confirmed yet. But guys, this is breaking here, all right? Actually, it's confirmed, all right? We have the breakout here and we break here. For me, between 38 and 24 is a no man's land. That's what I said as well on my Discord, and that's why I don't believe 34 would hold, unfortunately. But I might be wrong here. It's a 50-50 scenario, actually. Maybe 60-40. I'm a bit maybe bearish here because I can see that something is missing. You can here try to count. In the fifth wave, you should have 5 waves as well. It's very tough, to be honest. It's very tough. I can do something like this, 1, 2, and this to me look maybe like a 3. Maybe a 4 or 5. It's very difficult to do, but I have the feeling that something is missing, that we might break this and then go lower. I don't know. So just be careful, guys. It's not because we break 35 here that we are safe. We need to break 35. So what you can do if you want to reload, you can wait for this breakout, buy here. If we go here, you're good. But careful, if we break 34, it would be roughly the level you bought. You need to exit your position. I know you guys don't like to sell. I'm just giving you some day trading techniques here. This is what I would do, and I'm going to be allowed to do this very soon. I'm trying to set up my accesses and see if I am allowed actually to trade live in front of you guys on YouTube, for example. And this is what I would do. I would wait for a breakout here. I would buy here, maybe even sell a bit of shares here and buy it back here, because we have 2 areas of resistance here that we need to go above in order to be almost 100% sure that we are in this fifth wave. So I repeat, my first scenario is this one, we bounce back right away. My second scenario is we go here to 24. And once again, guys, don't be afraid. 24 is a normal corrective level. I remind you guys that fourth wave, they like to retrace to the top of the third or the bottom of the fourth preceding wave counting, which is here 37 where we went, and 24. So I wouldn't be that surprised that we go to 24. It would not change much. The only thing it would change, it's my target. So my target would be a bit lower, obviously, in this situation, because I use fibs for this exact same way I did it with you guys here. I measure from 1 to 3 and I apply it to the bottom of the fourth. So my level would be, and I go to the 1.618 relation, and I have 88, 128 as levels. So maybe 88, maybe 128. But in both cases, 24 would be an amazing level to buy. I'm sorry, I was not very clear in my last video. I was saying that here it might get ugly. I was thinking about another scenario, that this is just a 1. We have a 2, 3, 4, and 5, all right? but we are very far from this scenario. And for now, my preferred scenario, if we go to 24, is a strong bounce back, and then we need to see what is happening around the 38 area. This would be very important. But first, from 24, 95% chance we go back to 38. Then here, question: are we going lower, or are we actually doing the fifths? So it's going to be a very interesting question. For now, we're not there yet. We are at 32.5 in after hours. So let's see if we manage to hold this level or not. I think unfortunately we're going to go lower, which is actually a very nice opportunity. So let's see. And one more thing I wanted to show you guys. So I told you that for the regular bearish, bullish or bearish divergences, you need to wait for a breakout to associate it with the divergence. And for the hidden divergence that we had here all the way up, guys, in the correction, for example, here we had one hidden divergence, so market making higher lows with the MACD making lower lows. So here, and still we failed to go higher. But in this situation, you don't wait for the breakout, you use the breakout as a stop loss. So here it would be at this level, at the 48 level. So this is just a small technique. Try to remember this. Use regular bullish or bearish, it doesn't change anything. The regular divergences, those two, use them after breakout because it's a reversal pattern, and the hidden divergences, use the breakout as a stop loss because they are continuation signals. So guys, now I want to talk about GME in the same video because I can't post, one video every 2 days for both stocks, and a lot of you are asking me to do analysis every day for one and the other one. So the only option I have is to make one video containing the two of them. So let's get into it. All right, so here guys, same thing, it doesn't look good. So let me remind you what I was telling you in my previous videos, guys. So basically I was connecting here the two lows, and I had a level at 170, and I was telling you guys that this is the level below which I don't feel good at all. So let me remind you what we had here. We had this strong breakout, guys, and this you need to keep in mind because this event is not forgotten by anyone yet. All right, we had this huge breakout at the 200 level, then we went to 340. We got rejected as expected, and what is not expected is what is happening here. All right, a lot of selling pressure that to me is not usual. There are a lot of players investing in the stocks, and some of them probably collaborate together. We have the dark pools. So like I said, I don't like to talk about manipulation, not because I don't believe in it. Of course I do believe in manipulation. Of course I know that there is a lot of manipulation in GameStop, AMC, and in many other stocks as well. It's just that, some people talk about it a bit too much and just say manipulation each time they see a move down. I'm not like that. I try to do a clean reasoning, and if nothing explains what I'm having, then I call it manipulation. Here maybe we can talk about manipulation, because usually it's not happening like this, and I have something that really looks weird. I'm going to show it to you, and we had the exact same phenomenon on AMC. So basically I'm coming to my scenario very soon, but the first thing I want to show you guys is that here, why was I bullish? So the first reason is that we have this huge breakout, guys, that is, a perfect breakout with gigantic volumes, then corrected, which is totally normal. So for me, this was a 1, I was expecting a 2 that arrived, and then 3 and 4 and 5. I like to take the retracement, and usually we don't go below the 61.8. I mean, we usually go to the 61.8, so maybe slightly below, but usually we don't go below the 78.6% retracement. Here, 170. Funny. It's the same level as the trend line that is connected to two lows here and here is giving to me. And what happened yesterday, guys? We broke it. Let's check the volume quickly. It's very important to know if there was a lot of volume or not. Volume was low, but still we broke it. All right, so what does it telling us? It's telling us that if you use, for example, so I like to use hidden divergences as continuation signals that tell me that ongoing trend is going to keep happening. So here, for example, between A and the C wave, you connect the lows, you can see that the market is going higher. During the same time, the MACD here is making new lows. All right, so this is, as you guys know, a hidden bullish divergence. All right, it's this one. But once again, just like I explained for AMC, when you use those signals, I like to use the breakout as a safety line, as a stop loss. So that's why here, if we break this level, I would be, as a day trader, out of this trade just below this level. All right, because this is invalidating the bullish hidden divergence that I had here. But look, guys, how funny it is. So basically, this stuff would have made me sold. So on the daily time frame, I would have waited for a confirmation on the 4 hours. So let's be totally honest. And here, I would have exit my position as a day trader. I would have done that if I follow my rules, and I would be out of this trade. Now, I know the situation, I know it's Gamestop, so to be honest, I don't have Gamestop shares yet, nor IMC, because I was not allowed to trade on my personal account as a pro trader, but very soon I'm going to be able to have some, and here if I had some, I would of course not sell it. I would not feel good, but I would keep it, because I know what happened with AMC, guys. Look, exact same situation. Remember this trend line connecting the two recent highs before the strong move up we had here? And the exact same thing happened, guys. We retraced a bit too much, actually, this first wave. All right, we went below the 78.6%. And look what else happened. Here we had this regular bullish divergence. So on the 4 hours. So this is AMC chart, guys, just for you to follow. Okay, on the daily we have it. So here you can see that you have the market making the MACD making new lows, with the market making higher lows. Oh, funny, exactly like on Gamestop. And when I do this trend line here, it arrives at the exact same level, guys. It was 980. And I remember at this time I was telling you guys we will not break it, because I was very sure, as I had this breakout here, that we would go higher and do 1, 2, 3, 4, 5. So I remember that day I was not feeling good, guys, because I wanted to give you something that is clean, and this was not clean, this was messy. So here, what I think is happening, guys, is that hedge funds know that a lot of people use technical analysis, follow guys that know about technical analysis like me, and those guys, they have no other choice than telling you the truth here, that this breakout invalidates the hidden bullish divergence. All right, let me show you again the hidden bullish divergence, this one. So market making new low and the momentum shifting down. So basically the bears are not able to take more ground. And usually when you have this, you don't break this line. You don't, all right? Let me tell you that I've been doing this a lot of years, and usually it doesn't happen. And it's so funny that it happened on AMC, and that right after we had this very strong move up, and that right now, guys, the exact same thing is happening on Gamestop. And so what happened on AMC? We retested this trend line, all right? You know that after breakout, the market likes to retest either the breakout level or the breakout trend line. Here we have already retested the breakout level that was around 200. And we are now heading to retest the breakout trend line that is at 143. So guys, I'm giving you my preferred scenario. It's very clear, is that we go to 143, doing an ABC, completing our correction here. That would be a WXY. Yeah, a WXY. WXY. Let me put it in maybe pink. Not very clear, but anyway, you can see it. The WXY here would be complete. We go to 143 and we strongly bounce back, guys. This is my scenario. I'm calling it. I'm waiting for it. Once again, as a pro trader, I should be out of this trade. Let's be honest. All right. But here I'm giving you my personal feeling, is that something is tricking us, guys. Just the way it did on AMC. And just right after that, we had the strong rebound here. So basically hedge funds knew the signal was coming because they know technical analysis, and they probably, managed to destroy the signal by breaking this trend line. It's not that complicated to get a few percent for big hedge funds on a stock like AMC or Gamestop. It's actually very easy. So they break the signal. So, apes basically don't buy, but apes bought anyway on AMC. So let's see what happens on Gamestop, guys. Let's see what happens. I'm very curious to know if this is going to hold. If this breaks, guys, I need to tell you as well the alternative scenario. If this breaks, as usual, guys, we go to the previous levels. So 110 would be the next level. All right, but I believe strongly it's going to hold, and I believe strongly that my scenario that is here for a couple of months is the right one. So let's find out, guys. So that's it for me. I hope you enjoyed this video, and if you did, please don't forget, guys, to click on the sub, like, and bell button, so you're gonna be the first to know when I upload anything new. And stay close to shore. I see you guys.